Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and welcome to Friday. And even though it was a short week, man, it's been a long week. The madness of the last few years just doesn't seem to want to end. All kinds of craziness breaking out seemingly every day, every week, from huge currency moves to energy shocks to are we going to have power? Are we not going to have power? Now the latest, Jason, apparently we're finally going to get a storm, one of these hurricanes that we've been so lucky to avoid. But this one, they're saying it's supposed to land in California. And listen to this. Of course, it makes perfect sense. Some places are going to get more rain in a few hours than they do in a whole year. So it's going to be just another one of these things to look out for.
Yeah, weather is, it's one of those things. You grow up and you watch the news, or you're walking in public, and what's the weather going to be like tomorrow? It's an interesting joke, because if you look at it all the time and you obsess about it, it's extreme and terrible, and it's an emergency, and you freak out. But really, if you don't watch the television, it's rain or it's snow. It's just weather.
It's just weather.
It's not an emergency.
Everything's going to be A-OK. We got gold and silver up today. Silver up about 25 more cents. Looks like maybe I say it all the time. Obviously, the spot price has no bearing on physical prices in silver, but above $18.50 today. Gold's up about $7 right now. The Dow is higher, little relief rally as the dollar is selling off a little bit. I think that now that we've got, Canada's raising rates, the UK's raising rates, the EU's raising rates. Obviously, we're raising rates. Maybe we're going to get at least a pause in the decline in the euro, the decline in the pound sterling. At least for right now, if everybody's on the rate hiking cycle outside of the Japanese, that may signal possibly, I don't know, too early to tell, maybe an end of this big dollar run.
Yeah, well, we'll see. I mean, it sure seems like with the digital currency rolling in, and who knows how long it takes to get it in here, Joe, but that seems like it's very possible the dollar ends at that point. And so it's interesting how the dollar right now, you listen to these, these things that happen. Joe talks about October is coming next month, and who knows what's going to happen and what emergency is going to hit us. But the dollar hasn't been this strong versus other world currencies since 2001. 2001.
Decades.
Yeah. Well, we remember what happened in 2001, Joe, right?
Okay, there you go. See, this is what Jason brings, right? Here it is on Friday, and he's got to draw a reference to 9/11. And again, I think we're going to see a major crash. Significant warnings. Now, J.P. Morgan issuing an alert. They're worried that OPEC now is going to cut oil by 1 million barrels a day. This week, by the way, I guess last week, record drawdowns out of the strategic oil reserve, over 1 million barrels a day. Now J.P. Morgan says, listen, OPEC's going to cut 1 million barrels a day as a way, I guess, to mitigate how much oil is coming out of our strategic oil reserve. I think OPEC is saying, listen, we're not going to accept $90 or $95 for Brent crude. That's not enough. We want a lot more than that. So it really is going to be interesting how all of these things play out. But on top of that, they're now worried that banks, especially banks with exposure to European energy companies, may cause a huge problem here, as these energy companies, obviously, Jason, struggling to be able to pay bills. They're talking about margin calls, all these other things, these things that these companies do that nobody really talks about. And I guess at the end of the day, right, somebody had to be on the other sides of these trades. And now they're saying, hey, it might actually be a lot of these energy companies, or it could be companies that were buying a lot of energy, trying to keep the price down by shorting the energy markets, Jason, and now they may be on the wrong side.
Yeah, be careful what you do with commodities. I mean, we sell gold, we sell gold and silver, and I just had a customer tell me a story about a guy he was working with back in the 70s, and right up to 1980, and he decided to put all. Remember the Hunt brothers, Joe, and that was probably not a good time to just put your pension and your company's retirement stuff all into silver, which is what he did. And of course, the Hunt brothers, we don't have manipulation of an upward trend in silver. We have a manipulation downward. So this is why it's a good time to get into silver. Buy it when nobody's buying it, supposedly. But Joe, you got to be careful with what you're going to invest in commodities right now, the oil or whatever, anything. It's a dangerous game to play, Joe.
Yeah, it really is. When we get back, Jeffrey Gunlatz, one of the when I talk about, hey, there's only a handful of people I really pay attention to when they talk. This guy's at the top of the list. Very, very smart. Has really, when you think about, go back over the last 20, 25 years, he's always been on the right side of all of these things. He doesn't claim, hey, I was the first guy or this or that. He doesn't do that stuff, but he always is where the money ends up being. I'll tell you what he sees, and it's something I think that Jason's alluded to in the past. We'll be right back. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Friday. Sit back, relax, leave the drive-in to us today. Got some breaking news here. This is coming out of Europe. So remember, earlier this week we talked about the Europeans, pretty much every country announcing bailouts for their energy companies, their major energy producers. Apparently things are getting worse. This coming out of Germany. More and more companies are telling us they no longer have a supply contract for electricity or natural gas at all. The tap has been turned off, and in the truest sense of the word, this is the German Chancellor of Industry. Without energy, no economy can run. And Jason, I mean, that's at the simplest. You want to get rid of productive societies, you get rid of cheap energy.
Yeah, that's right. You've been reporting especially, but we've been talking about this for a while now, especially when the inflation came in 2021. And now you have the war, which started in 2022, earlier this year. And so they have all of the ingredients they need to create high prices or low prices in energy at any time. And so this is going to be one of those scary things that they push against the people. We can't do anything about it, Joe. We're not countries that buy and sell these things.
Right, and get ready now. There's a new term out there. The era of abundance is over. We're starting to see all kinds of world leaders start using this type of language. But right after that, so the German industry head comes out and says companies now are saying, hey, our contracts have been canceled. We have no contracts for electricity or gas to be provided. And so obviously this isn't the guy that owns the coffee shop. Okay, he's not calling because he doesn't even know. He's hoping, hey, when I go in the morning, I unlock the door, I flip the light switch, I hope the lights come on. These are going to be major manufacturers, major consumers of energy. These companies, they have their own private contracts with these large producers out there, and they're saying, listen, we have no contract. How can we operate this way? Right after that, the European Central Bank has now had an emergency meeting with their banks talking about the need for possibly trillions in liquidity support going to be needed to bail out a lot of these energy companies that appears that, Jason, again, on the wrong side of these trades. The European Central Bank has called for a meeting with top bank executives to discuss how to prepare for what they are calling a Lehman-style collapse of energy companies and worsening energy crisis. Here's the funny part. So they're saying, listen, we got to have an emergency meeting about a Lehman-style collapse, but here at home, hey, the Dow's up 300 points. That makes perfect sense.
Yeah, my parents worked for an energy company. They did gas and electric. It was a public service company, and then it got bought up years ago by Xcel Energy. And the standards go down, down, down as you have, just like with the banks, less banks. I think there's less energy companies. The age of, hey, the government to fully control people, they have to have different aspects like education, money. Well, they have to control energy. So we almost have to, it's almost like we have to figure out how to speak Spanish. We need to, anytime you put a term on that says the age of abundance is over, we just need to translate. False scarcity is coming. Because that's what it is. It's false scarcity, so we can lose more freedoms and liberties, Brian, or Joe, excuse me.
You know what? We've talked about it before. We could be producing way more oil, natural gas, way more natural gas. We could. But we simply don't want to. Go to allamericangold.com today. Do it today. There's a 27-second clip. It's Janet Yellen. Janet Yellen, for you that don't know, she was the former head of the Fed. She's now the Treasury Secretary. See how disgustingly interwoven the banking industry is with the government? She's out there, Jason, perpetuating the nonsense. And, of course, it's absolute nonsense. I've said it for how long? You only need a fourth grade education in math to know that it's nonsense, that somehow we can depend on wind and the sun to rid ourselves of fossil fuels. And this is this false scarcity. When they talk about the era of abundance is over, this is what they're talking about, Jason.
That's right. That's right. And like you said at the beginning of that statement, you say we could create more, and we aren't doing more. It's not us. It's not me and Joe. We should. That's another thing we should do. They, the controllers of these the governments and banks and corporations, they don't want to produce more. They don't want to make it better.
When I tell you, there's not an oil or natural gas company that doesn't want to drill more. There's not. Yeah. They're essentially being forbidden from doing it, period. That's what's happening. Anybody who believes that we can survive on wind and solar is absolutely clueless about energy consumption. They have no idea. And again, what I mean by that is, listen, we could do it. You're right. We could. Let me rephrase it. We absolutely could do it. We could make and build solar panels. And, let's just take, the state of New Mexico and make it one big giant solar panel, right? We can build wind farms everywhere. We can absolutely do it. That part is true. Unfortunately, the part that isn't true is what it's going to cost. So if you're okay with paying 4, 5, 6 times more for your energy, then what Janet Yellen said is absolutely true. That's the math. That's the part they don't tell you. That's the part that really changes the game in all of this. Just look at what Germany said. Hey, listen, we don't have any cheap energy. These places can't open. Right? We can't produce aluminum. We can't produce steel. We can't produce anything if we're going to rely on wind and solar, because the cost of it, and again, like I said, you think inflation's bad now, keep doing this policy, Jason.
Exactly right. A cartel has been created worldwide over time in the banking system. This because money is the most important franchise to control. So energy is a hard one. That takes a while to have a cartel there, and it seems like that they're really tightening down on a cartel on energy, Joe. Because if let's face it, if you're a CEO of one of the biggest energy companies in the world, well, why work twice as hard to produce twice as much when you can just charge twice as much because there's a scarcity out there, right? And that's what's getting ready to happen. These big corporations that are in hand and fist with the governments of the world. Once a cartel's in place, they'll set the price. No competition. We just need competition, Joe. You just need some small company out there. Hey, I'm going to drill this stuff up, and we're going to sell for half as much, and that drops the price. But we're not going to have that anymore, Joe.
We're not going to have it, and by design, they want obedient workers. That's what they want. And again, I think COVID's a great example. All the people that refuse to get vaccinated, I think this has emboldened these people even more. They're like, oh, okay. Oh, I guess we're not ready yet. You know what? We haven't impoverished them enough yet. Let's get it. Let's make it to where it's so unaffordable. Small businesses are going to be a dying breed. Like I said, interest rates, listen, we're not even halfway there yet on interest rates. People are really clueless about how high rates are actually going to be. And businesses are going to be paying this ultimate price, especially with energy shocks on top of this. But again, the more people you get dependent, the more obedient they become, right, Jason? Listen, they want China. That's what they want. China still locks down. They'll lock down 10 million people in a matter of minutes in China. And guess what? They get compliance. That's what they want to bring here. And this is one way to do it, right, Jason? I mean, obviously, bankrupt them, make them dependent upon the government. Hey, you want your credits today? Do what we tell you or you don't get your credits.
Right, Joe. I forget the name. I think it was The Way Home. I just watched a movie yesterday. It kind of talks about that. It talked about it happens during World War II, but it's in Poland, Russia, Germany, when Germany and Russia both took control of Poland. So this guy is taken prisoner. They're going to send him to the Gulag. They're sending him to Siberia if he doesn't sign this confession. He's like, I ain't signing that. He knows what's going to happen to him. And then they bring his wife in. Well, they created a dependence. They caused a situation to where she could not bow down to her captors, and she signed a confession against her husband. And then he wouldn't sign it, so they sent him to Siberia for pretty much the rest of his life. It's really dramatic. But doesn't it seem like we're slowly, the frog in the pot, you're kind of heading towards the Gulag, Joe? Isn't that how it feels like?
Heading towards the Gulag. Getting some more details here. Bloomberg now reporting that the European Central Bank has sent a questionnaire, if you will, for lack of a better word here, to all its major banks. These will also include U.S. banks, questioning them on the readiness following the natural gas stoppage. So for those of you who don't know, Russia's now stopped all natural gas flows to Europe and essentially saying, hey, as soon as you guys deliver us more turbines, we'll turn the gas back on type of a thing here. But here's what they want to know. They're saying that the stoppage of natural gas is going to trigger a wave of energy company bankruptcies. The central bank wants to see how resilient the lenders will be during this time of duress. In other words, hey, are you going to be able to stay solvent when these energy companies go bankrupt? And again, people don't understand how big energy is. Oil is the largest commodity in the world. This has it's an overwhelming impact on lenders because it's such a big number, Jason. This is why. And again, remember, what about these stress tests? Aren't they supposed to be doing these stress tests, right? You're telling me in Europe since the war started, we haven't done one of these stress tests yet?
I bet somebody's doing those stress tests, Joe.
Oh, God, it's a joke. It's an absolute joke. They know.
Yeah, they know
already.
They know. Absolutely. These guys are the power monsters of all of human history. They need to know everything about everybody at all times. That's why they're building data centers, recording everything we're doing. They need to know everything. That's the brave new world we're moving into, Joe.
Lenders need to submit their findings to the ECB next week. They're saying at the end of the month that the bankers will meet with the ECB for what they say are follow-up conversations. The interactions between the ECB and lenders are going to be behind closed doors. Of course they are. Because you know what? Listen, this whole house of cards, they're all insolvent. We've been saying this for how long? Have you not figured it out yet? They want this to occur. This end of the era of abundance. They know they need to reset. Listen, now, I mean, think about this. We got $40 trillion in debt. $40 trillion. It's impossible to pay off. But here, that's not even the bad part. Just one bank, J.P. Morgan, one bank, they got $60 trillion of derivatives, which means that B of A's probably got $55 trillion. Citigroup's probably got $53 trillion. Wells Fargo's got $50 trillion, right? Do the math. They need a reset, and this is what they're going to use to foster in. And what a great reason. Hey, it's not our fault. You know, Russia cut the gas off. So, you know, we've got to bail in all of these banks, Jason. It's a perfect scenario.
Exactly, Joe. I agree. We're going to have another couple of segments of the Patriot Radio News Hour. Stay with us, guys.
800-951-0592, Patriot Radio News Hour. Just nuts. It's just crazy. What I just read to you guys. Oil's up almost $3. Natural gas is up. Unleaded gas is up. Heating oil up as well here in the U.S. Gold's up 8 right now at 17.18. Silver's up almost 30 cents at 18.60. The Dow, believe it or not, up 300 points. Don't worry. It'll be fine. It'll be fine. All these energy companies are insolvent, but we're working with the banks to find out if we're going to have a Lehman moment or not. You know, no big deal, just a Lehman moment. You know, right, Jason? What could possibly go wrong?
Yeah, what could possibly go wrong? Yeah, the Lehman Brothers. I remember all the panic that was going on when that was happening. Yeah, didn't seem like it was no big deal, did it?
Right, yeah, it didn't seem like it was any big deal at all. Jeff Gundlach was out again. He was worried about the Federal Reserve overreacting in its fight against inflation. And this is going to be the big issue. This is going to be the big issue. Right now, Jay Powell, who we all know, this guy is weak as weak can be. I mean, he is a clone of Arthur Burns. If you don't know who Arthur Burns is, for all of our new Utah listeners, he was the head of the central bank during the 70s. You know, so we had Arthur Burns and Jimmy Carter. Remember, we started the 70s, started with an oil shock, right? Then we got Arthur Burns and Jimmy Carter. And really throw Nixon in there. So we kind of had it all again, right? We've got an oil shock. This one, no. This one not because of an embargo. Oh, no. No. This one, a self-imposed gunshot wound on energy prices. Then we had, you know, instead of Richard Nixon, we had Trump, right, and all the stuff that happened with Trump. We've got a weak head of the central bank. Instead of Arthur Burns, it's Jay Powell. And instead of Jimmy Carter, we got Joe Biden. Jason, it's the perfect recipe.
Yeah, it does have a smell of some pre-planned event.
I mean, it's not even that hard. You're like, wow, I didn't think about it that way. So he's out, and he's talking about that he expects a severe slowdown in the economy that he believes the Federal Reserve is not seeing. And again, this is something Jason and I, we've been warning about this. On the top, things look okay. Underneath, however, not good at all. I don't even want to start on housing. These home builders, there's 300 different home builders all across the country. They were saying crazy stuff. First of all, they were saying, oh, by the way, here's the good news. They had good news. Hey, there's no more delays in housing. right? Hey, we can build these homes lickety-split, right? It's great. The supply chain problems have gone away, but then they followed up with, unfortunately, there's nobody there to buy them.
Oh, man.
Hey, here's the good news. We don't have a supply problem anymore. Even garage doors are back in stock, but now we don't have any buyers. So Gunlatch says that he has no confidence that Jay Powell and the Fed can figure this out, and saying that investors' ability to navigate today's challenging market is exceedingly difficult. Listen, I'm going to give you out my son's number. I've been doing it for months now. You need help on this one. You have no idea what is really coming. 602-909-9048. Whatever you don't put in gold and silver, call Joey, because he'll at least protect these losses. He said that financial markets around the globe need to listen carefully and saying that the next shock is that we're going to have to put in a big overreaction to the inflation problem, which we created from our initial reaction of excess stimulus. So, again, let's put in the blame squarely where it needs to be. Hey, we created the problem by way too much stimulus. Then the Fed, because Jay Powell's a weak man, right? Hey, they underreacted. Now, Jason, they've got to overreact. And he says this is going to end up creating momentum that is more deflationary than most people believe is even possible. Let me tell you what that really means. Depression is what he's talking about. How many times have I uttered the words about what we really need to have happen to get energy back in line? We need demand destruction at levels, Jason, that I agree with Gunlatch here. Most people don't think it's possible, but believe me, it is.
Well, I'll add one thing to what he's saying. To me, I think these things are planned well ahead of time. I don't think they make accidents. I really don't think they're stupid. I think they know what's going on, and it's just a shell game. So the whole idea that they didn't know inflation was coming and they reacted slow, I almost, because they're in that catch-22, Joe, the Fed, they have to come up with a story that makes it seem like they're doing the best they can. So they'll admit to mistakes when they have nowhere else to go. So I think if they were raising rates in 2021, we'd still have the inflation. Well, I don't get the feeling that if they were raising rates back then, we'd still have this inflation, because they are raising rates this year, and the Fed is already saying next year in June it's going to be 7% inflation.
Yeah, they just bumped it to 7.5 now.
See? So they know what's going on, Joe. They know.
Even higher. Gunlatch saying financial markets are in a fragile state, and believe me, he's right. We haven't seen anything yet. I mean, the Dow got to 37,000. Think how much money they created after the financial crisis. Remember, the Dow got down to like 6,700. It got to almost 37,000. 6 times. They flooded the world with money and created the inflation. This is what Gunlatch is saying. They created the problem, and then they acted like they didn't. And now they're going to go the other way in these financial markets. And again, I say it over and over and over. It's gradual at first. Consider 2022 gradual. Right? Markets down 20%. Consider that gradual. Gunlatch is talking about the markets in a fragile state because he's worried about what could happen suddenly. Inflation at the highest in more than 4 decades. I'll tell you the mistake he thinks the Fed's going to make when we return. 800-951-0592. Gold's on the move here, up 10, 17, 20. Silver up over 30 cents now, 18.60 and change. The last day just got a new price increase. Utility silver, junk silver, dimes, quarters, half dollars, pre-1965, so 1964 and older. You know, back in the day, back when we didn't have inflation, back when the Federal Reserve wasn't printing money endlessly, go back, think about 1964, right? Kennedy's been assassinated. Lyndon Johnson starts all these social welfare programs, credit cards starting to be introduced to us for the very first time, and the whole debt bubble just starts imploding, right, Jason? Nixon closes the gold window, right? They took the silver out of the coinage. So right now, listen, tomorrow we're probably looking at $10 increases. So I've got dimes at $105 a roll. That's 50 silver dimes. You think about the digital currency that's coming, the potential now for them to really limit anything, right? Hey, you're only allowed X amount of ammo if you're allowed ammo at all, right? How easy will it be for them to ban, like AR-15s and all these other things? But I think it goes more than that, Jason. I think they can tell you how much ground beef you can buy, right? How much milk you can buy, right? Oh, you know what? You're buying things that we deem not to be good for the economy, or wait a minute, you're using too much energy, or you're using too much water, in banning things that I think this is going to create a huge black market of things, and having, that fractional gold and silver could be really invaluable in the future here. So we've got silver dimes. There's 50 dimes in a roll. So it's a $5 face value roll. They're at $105 a roll. Dimes are going to be up $5 tomorrow because it'll be the dimes are half of the amount of silver that the quarters and the half dollars are. That's at 105 quarters, 40 silver quarters. That's a $10 face value roll. Those right now are at $210. Based on this new price, Jason, we're going to be looking at $220 come Monday, and then rolls of half dollars. That's 20 half dollars, so that's a $10 roll. Half dollars carry a bigger premium, $230. Those are going to be $240. Half dollars may even be $245 come tomorrow, Jason. As these premiums on silver, nobody has stopped buying here. This is just an illusion of paper markets not wanting to deal with realities.
Yeah, exactly. Anybody out there that's new to listening to the show, if you want to try to figure out how much raw silver is in, say, a roll of quarters, it's 7.15 ounces of raw silver. The coins that we spent back when Joe was talking about is 90% silver, 10% copper. It gave that silver a little more strength with the copper, and that's just the way they made the coin. So a roll of dimes has exactly half of 7.15 ounces of silver. I think it's 3.575, something like that. So that you can kind of gauge your price right there, Joe. And those quarters and those dimes, a great price.
On the dimes and the quarters, we're under $30. Actually closer to $29. It's the only government hallmark silver you're going to be able to get for under $30 today at 800-951-0592. And again, these emails just come hot and heavy here. And Jason will tell you, yesterday, the largest wholesaler in the world, they sent 4 different emails about trying to buy utility silver. And they kept bumping the price of how much they would pay over spot to get these orders filled. And quite honestly, the premiums they had to pay, Jason, just meant, hey, the premiums go up. That's just how it works.
Yeah, if you have to pay about $30 an ounce to get silver today, that means that's what it's worth. That's the value of it. That's where the spot price really should be. And the physical markets, they will always move upwards, but it's a cranky thing because the paper markets don't want you going physical. Just like, the whole world doesn't want analog. They want you to be digital. They want you to be on your cell phone. They don't have a paper bill come to your house. Just pay that bill. Let us come into your account and pay that bill online. And let's just do it this way, Joe. That's where we're heading. It's a scary thing.
Yeah, and again, 800-951-0592 to take advantage of these prices because they're not going to last. The difference here now, so going back to Jeff Gunlatch, he's saying that the market thinks the Fed is only going to raise another 125 to 150 basis points, which Gunlatch says isn't accurate. But then he goes, the markets right now think that 6 or 7 months from now, so over the 6 or 7 months, they're going to go another, let's just say 150 basis points. He goes, right now, the markets think in 6 or 7 months that the Fed is going to mysteriously turn around and start easing. They have this idea that the markets aren't going to hike rates more. Gunlatch says his belief is the exact opposite. Rates are going to go much higher, and that instability in these financial markets is going to be very brutal because they actually think the Fed's going to go the other way. And Gunlatch says, and I agree, I don't think they go the other way. They may stop, but going the other way is not possible. We'll be back after the break. 800-951-0592, utility silver, dimes, quarters, half dollars. Rolls of dimes at 105, rolls of quarters at 210, rolls of half dollars at 230 at 800-951-0592. And man, Gunlatch makes such a great point. Listen to this, Jason. He goes, because he's kind of poking fun at Wall Street. He says that they're trying to convince themselves that the idea is that the Fed is going to hike rates significantly more, right? Another 150 basis points. And then they're going to drop them back down again immediately after that. He goes, that's kind of a strange thing to predict, right? Why bother with anything then, right? Well, why bother? Why even go through the exercise if they're just going to bring them right back down again?
Joe, that's like I said, I think they knew they could have been raising rates in 2021. They didn't, and there's like, oh, well,
right.
we made a mistake. Well, because they want to catch 22, raise rates, blow up the markets, lower rates and print money, and inflation goes berserk. So they just act, they're biding their time. They're just trying to get kick that can down the road as far as they can, Joe. They know what's going on. Raise it and lower it. That's nonsense.
Right. He's like, it's kind of ridiculous. He goes, so basically what you're saying is, I'm a 6 foot, 185 pound guy, and I'm going to put on 100 pounds during the holiday, and then I'm going to take it all off with a crash diet at Easter. What's the point of that, right? That's not healthy. Matter of fact, that's even worse. He's saying that Jay Powell is desperate to try to get some form of credibility back. And again, Jason, there's no good outcome here. And that's really what Jeff Gunlatch is saying. He goes, the realities are, if you actually believe that the Fed is going to raise rates only to bring them right back down again, what a fruitless exercise that was. You talk about lack of credibility, that would do it for sure. And that he actually believes that the Fed and Jay Powell, because he's so weak, is going to have rates too high for too long. That's actually going to cause the next Great Depression. And again, the problem is if he doesn't leave them up there, right, you're going to run that scenario. Jason and I keep talking about this double Great Depression, which is we're in a depression, yet prices are still elevated, Jason.
Yeah, do any Fed chiefs have any credibility? Are they just kind of like the donkey that gets kicked around, and they just get a big fat paycheck and some status when they get out of there? I mean,
it's such a great point. They get credibility from the paper traders, right? The Wall Street pinstripe bandits. That's where they get all their credibility. They have no credibility. Think about this. When's the last time the Fed actually projected the economy with any sort of accuracy at all? I can't even remember. Their predictions are so bad. They're so off base. I mean, we make fun about transitory, right? Because look how bad, and they did that for like a whole year. And Wall Street, right, and the TV kept trying to say there's credibility. You and I would have been fired from our job. We wouldn't have even made it through the 90-day probationary period. And not only did Jay Powell not get fired, he got reappointed, Jason. They reappointed him.
I kind of wish the president would be the head of the Fed, because at least half the country every 4 years would want to get rid of it. That may be one of the smarter things you said. Right? We can get rid of these guys. Yes. Yeah, exactly,
That's
Joe.
the solution. Ending the Fed is the solution to all this nonsense. Patriot Radio News Hour. God bless everybody. Have a great weekend.